What's up, everyone? I hope everyone had an amazing day. Today's video should be nice and sweet, short, simple, to the point. Let's get right into it. All right, number one, tomorrow morning, the first of the month, we have very, very important news coming out at 10 a.m. We also have some important news coming out at 9:45, but 10 a.m. is the big kahuna. All right, so we're going to try our best not to have any positions opened during this time. And we're going to have to keep that in mind. And basically what we're going to do is we're going to wait for this news to come out. We're going to see which direction the market is going to go. And then we're either going to take a small position to follow through with that, or we're going to wait for a pullback and play a continuation of that momentum. All right. Very, very simple. Number two, we entered into IWM puts, primarily because there are a lot of economically sensitive stocks that are going to have earnings this week. And I believe that this run up that we see in the IWM is only purely based off of basically running up prior to these earnings reports. All right. So we got into late December puts, 182 puts on the IWM. And I think that those are going to do pretty well. Nice, safe little position. Should be fine. If we do go up higher, we might average in. But overall, I'm pretty comfortable with that position. Much more comfortable, in fact, than our NASDAQ puts. So if you remember, we were also short NASDAQ over the weekend, and those puts were up 25% at the open. I was very, very shocked to see that weakness. And, you know, still, regardless, you could see that they're working out. So that worked out. I'm very, very confident about the IWM puts as well. Okay, so let's just start off looking at the overall market. Number one, the 30-year bonds are still showing weakness. They were showing a lot of weakness heading into the close. And we know that if the bonds are showing weakness, then that is obviously also weakness in the stock market. So if the bonds are weak, the stock market and the equities market should also be weak. So that's number one. Number two, very simply, the dollar is showing a lot of strength. When the dollar shows strength, then the stock market should be showing weakness. And clearly this is showing some substantial strength. If we continue showing strength and breaking above this 20 exponential moving average, this can continue flying. And basically you can see that the MACD indicator is signaling that we're about to cross over the slower MACD line. So this blue line here is about to cross over the slow MACD line. And when that happens, that is generally a good case that we should see at least 2 days of continued momentum to the upside. But of course, you know, it's not a guarantee, but regardless, bonds are showing weakness, the dollar is showing strength. So we basically had to get into some sort of puts. And we just so happened to get puts for a longer term. I think that those should be fine. So now immediately looking at the SPY, we can see that the MACD from yesterday that we were looking at, how we were slowing down here, we needed a very, very strong move to the upside, but we didn't get that yet. And of course, I was also saying that I wanted to go short on the SPY once we closed below this uptrend line. That hasn't yet happened. And basically intraday, we saw a lot of weakness from the SPY, primarily due to the weakness that we felt in the NASDAQ. So the NASDAQ was basically holding the SPY back. So that's another reason why I feel comfortable going short in general, because yeah, I hope that makes sense. But regardless, we don't really want to see we don't want to see the market basically stagnating here, because it's a very, very unlikely situation that we get a strong continuation to the upside. But here's the thing. In my opinion, we can easily still in the short term. So look, over the weekend, I was very, very adamant that, you know, we're probably going to hit 405. The puts that we bought are probably not going to work. This was a clear cut, very, very bullish situation here. Obviously, you know, we closed above 387, 388. This was a very, very strong bullish close. So I was pretty shocked to see our NASDAQ puts up 25% at the open. And of course, I don't mind, right? But the thing is, it's so... All right, I just need to drink some water. So basically, clearly in the short term, the market can continue going up. We can easily see 393. We could easily see 400, etc., etc. In the next week or two, we can easily continue going up. All right. So that would be the easiest situation. I want us to continue heading higher. But now what you need to realize is that the stronger the market looks heading into FOMC, the less likely it is going to be the case that the Fed is going to pivot and basically stop increasing interest rates at the same rate that they are. So if the equities market is showing a lot of strength, that is basically going to be grounds that the Fed is not going to increase interest rates at that same rate. So if they don't increase interest rates at the same rate, then it's basically showing that there's a lot of like economic, basically the market is showing strength. The stock market is showing strength. It means that the economy is showing stability and they don't feel the need to hunker down on inflation and interest rates. But in my opinion, that's still wrong to do because it just puts off the issue for a later date, and it'll just be worse later on. So it's basically kind of difficult to guess what's going to happen. The best we can do, the best that I can do is basically, you know, we got puts on the IWM for late December. So whatever happens in between this time, we can always just adapt to the situation. But overall, it makes the absolute most sense for us to continue being bullish in the short term. I am not holding any bullish overnight positions, but it makes sense why we would continue going up because we had some strong closes and everything. Personally, I want us to look very, very bullish. It would just make our intraday trading so much easier. All we would have to do is just buy calls at support and just follow through with the strength. That's all we would need to do. That's why I want to see more strength. I don't care if we hit 400. I just want us to look bullish so that we can continue up intraday. That's literally all it is. Overall, I think that in this week or the next week, sometime between basically before the 20th of November, we should get some sort of a top in the market. It could be 400, it could be 405, wherever it is. But then from there, we're going to end up falling. So the higher we go, the more inclined I'm going to be to get into more longer term puts for December. And that is basically my thesis for that. One of the other reasons is, number one, large tech stocks earnings were literally like garbage. All right. Apple is the only reason why the NASDAQ and like the overall stock market did not completely just fall, because all of the other large tech stocks were down at least 15-20%. All of the large FANG stocks did terribly. Okay. You can clearly see that the NASDAQ is still trading below the recent highs. So that's another good indication that the market is not showing a lot of strength. And it's also very, very unlikely that the IWM is the main reason why a market move can sustain itself. Usually when the market is showing a lot of strength, it's not really the IWM that always can sustainably keep this rally up. The NASDAQ also needs to basically catch up as well. But the issue is that the NASDAQ, the largest NASDAQ stocks, just reported terrible earnings. And because the largest NASDAQ stocks reported terrible earnings, I'm assuming that this week, when a lot of these IWM names report earnings, they should also be kind of bad. So we'll see. That's my thought process. And yeah, I mean, we're just going to have to see how that plays out. The last thing that we could take a look at is the VIX. The VIX is the only thing that isn't really in our favor as much. I was showing how over the weekend we overextended very, very low. And usually that was a very, very good sign that we do get a bounce. Because if you look in the past, it's very unlikely. It almost never happens that we get another move to the downside outside of the lower band, right? So that's why this morning we gapped up and we were up at like 5% at the open on the VIX. And that was a good reason why, I mean, basically that, you know, this drop in volatility was another reason why the SPY did, our puts did well, because the market fell, right? So as the market fell, the VIX popped. But now you can see that the VIX has a lot more room to go to the downside. The lower Bollinger Bands are not nearly overextended anymore. They are in free fall, right? So the volatility now can continue to fall much, much lower. This is the only thing here. the dollar is bullish, which is bad for the stock market. The bonds are bearish, which is also bad for the stock market. But the VIX is showing that there's a lot more room to fall to the downside on the VIX. And if the VIX continues falling, then that is good for the stock market. So the VIX is the only thing that's giving a conflicting indicator. The dollar and the bonds are basically showing that equities should fall. So we're just going to stick to them and hopefully the VIX gets its act together and also just continues bouncing a bit. So to give some gains to our IWM puts. But overall, that's really it for today's video. I hope you guys enjoyed. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.